All right, we are live again. Happy Friday, everybody. In today's live stream, we're going to talk about is a recession around the corner and what you may want to do if there is a recession around the corner. Now, I found an article talking about this, and it seems like from the actions from the Fed, as far as them, the amount of the percentage they want to cut rates, it seems like they think a recession's around the corner if they don't take specific actions when it comes to how many basis points they want to cut the federal funds rate. So yeah, I mean, for me, I looked up the actual definition of a recession, and let me actually share my screen so I could show it. Because I'm not when I think of a recession, I think people losing their jobs and stuff like that. So, but there's an actual definition for a recession, and it says a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in two successive quarters, right? So if GDP goes down in two quarters, 6 months consecutively, then it's considered that we are in a recession. And basically, GDP, growth domestic product, basically measures the amount of goods and services that are produced over a time period. And if that's negative for two consecutive quarters, we're considered to be in a recession. Now, what that looks like, I guess we could compare it to 2007, 2008. Now, I wasn't too much into the finance space back then, so I can't really recall how that looked like as far as for like the average person. But I'm assuming, people lose jobs, right? And then two, prices go up if we go into a recession. So, and obviously the 1%, uh, you know, does fine during that time. I don't think people in the 1% suffer. It's mostly, the middle class and below that actually takes a hit, because we are the main ones with the 9 to 5s, and we're the ones that are impacted the most by a recession. Now, let me switch over to this article. So yeah, so it's two consecutive quarters of negative GDP. For those of you who wanted to know what exactly they deem a recession. All right. So the article that I have here says the Fed's rate cuts projections are pointing to imminent recession, economists say. All right. So let's see what they say. It says the Fed's interest rate forecast signals an imminent recession, economist David Rosenberg says. In previous soft landings, the Fed usually cuts rates by 75 basis points, but they're forecasting a 150 basis point reduction by 2025. Now, that's pretty big. Typically, I'm trying to think, yeah, when they were raising interest rates, they were doing like 25 basis points and 50 basis points. I'm not sure if they did a 75 basis point increase. So 150 basis points, basically like 1.5%, right? So that's a big increase. I'm not sure if they're saying 150 basis points in one reduction or across the whole year of 2025, because that would be a lot of that'd be a lot to cut interest rates. I think they're talking about the whole year. I don't think they're talking about a 150 basis point reduction. That'd be crazy. But it says the Fed usually cuts rates 75 basis points. So the fact that they're forecasting that they might have to cut it 150 for 2025 suggests that a recession is around the corner. Now, and they haven't cut rates yet for 2024. So, I mean, I guess, that's why, maybe they have to pick up the pace in 2025. I'm not sure, like with the last time the Fed met, they spoke about how they want to see inflation at 2%, I think, or trending towards 2%. I think right now it's at 5.3 or 5.4, or it might be 4. I think it might be 4.7 or 4.3, something like that. It's in the fours. I don't think it was in the fives. I'm thinking of the actual interest rate right now, but I think the CPI data came back, and I think it was around 4 point something, and they want to see it closer, trending to a 2% interest rate before they start to decide to make cuts, right? So stock investors are eagerly awaiting the central bank's pivot to looser monetary policy, right? Because when they cut interest rates, stock prices go up. And the thing is, you want to be prepared before they make these interest rate cuts. So stock investors are, always watching the news, always watching what the Fed's doing, because they want to position themselves to take advantage of the run once they start cutting interest rates. Because I'm going to tell you, once they start cutting interest rates, everything's going to shoot up. Now, I think for the crypto market, I think there's just much bullish news that came out already, and so many positive catalysts to come out in the remainder of the year that not that we don't need interest rate cuts, but I think crypto is going to rise anyway, and it's an election year as well, so they're going to cut interest rates this year. Again, they're trending towards 75 basis points, and maybe they do cut more in 2025 if they feel like the economy is getting out of control. But we'll see what they do with that. But let's keep reading. It says the Federal Reserve interest rate forecasts are flashing warning signs of a recession just around the corner, top economist David Rosenberg says. The Fed doesn't want to say this explicitly, but it's actually saying in not so many words that a recession is very likely coming our way, Rosenberg said in a note on Thursday. Despite the Fed's optimistic forecast of a 2.1% GDP growth and a 4% unemployment, Rosenberg sees official prediction of a sharp drop in the median federal funds rate at a recession indicator. The Fed anticipates the median federal funds rate will drop by 150 basis points to 3.85 by 2025. So it looks like I said, they're going to be cutting rates, in 2024, and most likely the first interest rate cut will come in May or June, and then they'll keep doing that. They'll probably do 2 more after that, because I think right now they started off at 4 at the beginning of the year. But now they're saying, okay, we're going to cut interest rates only 3 times. But, it's probably going to be a little bit more, since they took out, one of the planned interest rate cuts, right? They went from 4 to 3, and, they're probably going to make up for it. So you might see 125 basis point cut, and then they might do one for 50 basis points. And then maybe another one for 25 basis points. That would be 1%. Which would be 0.25% over their predicted amount, which is 75 basis points. All right. So it says, Rosenberg said in past instances of a soft landing in the economy, the Fed typically reduces rates by 75 basis points in 1987, 1995, 1998, and 2019. So, again, they're talking about the whole year. They're not talking about, one instance of that. So, in 1987, 1995, 1998, 2019, they cut interest rates by 75 basis points. So it says the only exception was September 1984 to August 1986, when rates saw deeper cuts following a 60% collapse in oil prices. So we're going to need to see something catastrophic for them to cut it more than 75 basis points. And that something can happen, right? Maybe something with the debt that we have outstanding, maybe something with the student loan debt, since they turned that back on, right? People have to start paying, because they cut that off during COVID. They allow people to not pay their debts for a little while, and then they recently turned that back on. I think it was like a few months ago, or I think the end of last year, right? So, we could see something happen in that market, which would trigger them to cut rates a lot more. All right, so it says outside the episode, any move down in the funds rate during the post 20 World War II era, anywhere close to 150 basis point only occurred because of one thing he wrote. Does he say what one thing is it? Okay, maybe he's just alluding to like one catastrophic thing, right? As the Fed has shifted focus to combat recession, stock investors are eagerly anticipating a series of rate cuts starting this year. Didn't they say this up there? Yeah. All right. So yeah, obviously, stock investors are waiting to see. I think everybody's waiting to see when they're going to cut rates. But I mean, it's kind of already written in stone, right? My take on it is that everybody should already have their positions. You know, that they would like their favorite stocks, their favorite ETFs. They should already have these positions because it's already known that they're going to cut interest rates. Now, preferably, I would be looking at the crypto market since we're, probably 25% into the bull run, the crypto bull run, and we have a lot more to go. This month coming up, it's going to, we're going to have the halving for Bitcoin, and that's going to ignite, a spike in Bitcoin, and then that's going to translate to a spike in altcoins. So, yeah, I think we're closing in on, a big run comes pretty soon. We already had a big run in Bitcoin, but I think haven't seen the extent of it yet, and it's going to be coming soon once we get this happening this month. All right, so it says defaults are now piling up as the delinquency rate has topped 6%, doubled the average since 1997. All right, yeah, so people are not paying their credit card minimum payments, their loans. A lot of people are defaulting on their loans. So once you start seeing stuff like this, it kind of points to a recession, right? It basically says, okay, things are getting expensive, and people are going to cut what they don't need to pay for, right? And money that you borrow from the bank, obviously you need to pay for it. You can't just borrow money and not pay for it. But people cut the first thing that's not important, right? What's important? You need to eat. You need to get to work. You need a roof over your head. So obviously people are going to pay their rent. But in some cases, people don't even pay their rent. I know here in Florida, though, if you don't pay your rent, you get kicked out pretty quickly. But in other states, they can't enforce that as fast as Florida, right? It takes them like a few months to kick somebody out of their home that they're renting, whether it's an apartment or a house. And, maybe it takes 3 to 4 months to get somebody out of the home, and they saved up, maybe the mortgage is 2,000 to 3,000 over a 4 or 5 month period. They put close to 10K away. Now they could move somewhere else, probably sign into a new lease before that delinquency reflects on their credit. So they were able to put away $10,000 and then also get a new place, right? Because typically, if you default on your rent, you default on your mortgage, that's going to hit your credit score, but it takes time for that to happen because the bank needs to report that. There's a whole process to that. And by that point, they're probably in another place and they saved up a whole bunch of money. So, but yeah, but you start seeing this type of stuff when a recession's close by. You see the default rate goes up and prices go up. The things, gas, food, all these things go up when we're close to a recession. So this is why we will see rate cuts this year. Now, obviously, it's going to be more towards the middle and the end of the year, but we are going to see rate cuts and going into 2025. So I think it's going to be a real bullish year, bullish 2 years. For me, so this is what I think, right? So we talk about the article. I think there's going to be like an imbalance as far as asset classes go. I don't think everything's going to go up and or everything's going to go down at the same time. So that's where it presents the opportunity, especially like right now. I think crypto is going to go first. I think we're going to see a bull run in the crypto market. And that's great if you're a crypto investor because you get to now take those profits if you're smart, right? There's some people, and I was reading something on Twitter, like somebody, Dogecoin started to go up again, and like you see all these Dogecoin holders that have millions of coins. You know, I think from one of the people, they had 3 million. It went, at the height of the last bull run, and then it went all the way down to like 30 or 40,000 at, when we were in the bear market. And now I think Dogecoin is like at 20 cents, and I think the all-time high was like around 70 cents. So that person's at $1 million, and that person was talking about how, he's gonna hold until a new all-time high, and I'm like, dude, have you not learned from the previous bull run? I would be taking that $1 million out and putting it in a safer asset. Maybe he could even transfer it to something like Ethereum. But at the end of the day, right, you gotta sustain the gains, right? So you gotta pull everything out at some point. I mean, you don't have to, right? I'm just saying what I would do. But like if you made that much in gains, right, you want to put it in some type of a real asset. And I'm not saying crypto is not a real asset. I think if you're going to leave that money, I would at least transfer it, that money he made in Doge. I would at least transfer it to Ethereum or Bitcoin. And then if you wanted to leave it there, then I would be cool with that. But to leave it in Doge and think Doge is going to hit an all-time high, and you're just going to it's going to be the same thing, right? You're going to go from 1 million or whatever, 3 million back down to 20. And a lot of these meme coins don't have any utility. I think Doge, like the only thing you could do with Doge is send it to somebody and send it back. Like that's pretty much it. Unless they're building something, right? It's worth, which is the crazy part to me, it's worth like $28 billion. I know so many crypto projects that have so much better utility that don't have that market cap, and they provide so much more value, and it's crazy. So if you're up profits like that, you should definitely take it. But I was saying that to say, right, I think we're going to have an imbalance with the crypto market and the stock market and the real estate market, right? So if you position yourself correctly, I think the crypto market's already started. So I think that's going to go first. And then if you're smart, you could take your gains and move it to markets that haven't, gone on their bull run yet, like the stock market or the real estate. Obviously, real estate is up, but you do see some prices coming down a little bit. I don't think we are going to people are waiting for prices to come down in real estate. Like, the average home in Florida is like 500K. And people are waiting like back for home prices like we had back in 2015, 2016, where you could get a decent home for 250K, 300,000. And I don't think we're going to get that. We might see, maybe a $500,000 home. Maybe now you could get it for 450, 425 at the least. But I don't think we're going to get those home prices that people are waiting for. So I think the best strategy here is to time the imbalances, right? It's harder to time a specific stock or a specific crypto, or maybe a property is a little bit different because you have to hold most likely you'll hold the property for a lot longer. But I think if you can find, if you could solidify some good gains in the crypto space, if that's what you do, right? I'm not telling you to invest in crypto, but in my opinion, I think the crypto bull market is going to come first. And then, once you make your gains out of there, you can transition into an equities portfolio, right? Maybe you get into some Tesla. Maybe after you made all that money in crypto, now you can start looking at some equity plays and say, okay, I'm going to park my money here, pay my taxes, and, double my money again, right? You triple, you quadrupled your money in crypto, and now you're putting it in equities or real estate, and then in the next maybe 2 to 3 years, you doubled your money. So in the span of 5 years, you got a 5 to 6x because you timed the imbalance. So, and that's what I learned too from the last bear market. If I would have pulled the last crypto bear market, if I would have pulled out money in time and did work those imbalances of the market, I would have did a lot better. But it was my first time going through a bull market like that, so this time I'm very prepared. So I'm definitely going to capitalize on that. And once I get into any of those equities or I build out an equity portfolio after I take out gains from the crypto, I'll definitely share that. Also, too, I did take a trade, like, besides my crypto portfolio, I did take a trade in crypto I said this in my last live. I took a DEX trade, a decentralized exchange position. I'm not going to say the name because I don't want people to follow it. But yeah, and this is getting dark. Let me go turn on the light real quick. But yeah, so I took a DEX trade. I can tell you the amount was $8,000. So, but where I pulled those funds, I could have just I'm just gonna say where I pulled those funds is the unique thing, and I don't recommend everybody do this, but um, and I'm gonna explain it too once I the trade is over. I'm not gonna talk about it too much, but anyway, it's an $8,000 position, and uh, yeah, so far the trade is going well. I'm up, I think $1,400, and I think once the bull market picks up, it's going to be up a lot more. And I have a goal in mind. This is not, again, it's a trade, and the only reason why I'm doing this is because we're in a crazy crypto bull market, and I think if you get into certain plays, you can make some additional money aside from my major portfolio, right? So I have a major portfolio in crypto where I have prized crypto assets. Not to say that the trade, the token that I'm trading with the $8,000 position is not a good project. It's a really good project in my opinion, but it's not something I would want to hold long term, right? I think it could definitely perform well in the long term. I think it actually I think it actually could perform well throughout the whole bull market up until the end, up until we get back into a bear market. But I don't want to hold it through another cycle. So I'm making a quick trade, an $8,000 trade, and hopefully, probably triple or quadruple my money and then take that out. And then I can share that with you guys and, my thought process behind that and just show you, what I did, why I did it, and where the funds came from. Because I think it's definitely where preparation meets opportunity type thing. Because honestly, if I didn't know too much about the crypto market, I wouldn't be able to take this trade confidently, right? Anybody can open up a brokerage account and take a trade and then lose some money, but I don't. I mean, obviously, there's always risk, but it's highly in my favor. This trade that I'm taking, and I don't think I'm going to lose money at all. I'm probably going to get out sooner than what I want to, just because to stay safe. But yeah, I can't wait to share that once that's over, and probably share once the bull market's over, share some of the positions I took in the crypto market throughout the bull run, in the bear market. Just probably make a video. I might do a live or make a video. I think I'll probably just do a live on it. I don't think I'll do a thing, and then hopefully at that point I'll be able to build out my stock portfolio. So yeah, let's see here. But yeah, so what was I gonna say? So yeah, the imbalance. I think if you if you time the asset classes appropriately, and when things are going into a bull market, when things are coming out, you can definitely time that imbalance and get another 2 to 3x on your money. So it's going to be very interesting. And yeah, that's all I wanted to talk about. I think so. As far as what I think about the recession, we could potentially go into a recession, but not until, I don't know if you can have a recession if you have a bull market. I mean, for the stock market, a, we don't have a, it's not like, well, I mean, besides like the AI stuff, I'm trying to look up Tesla. Besides the AI plays, like obviously AI is heating up, so those stocks are doing really well. But opposed to the whole market, I mean, Tesla's kind of taking a beating. They're saying that this could potentially go all the way down to $100 or 69. If Tesla, by the end of the year, if Tesla's at $70, I mean, that's going to be an ultimate, ultimate imbalance for people that are like in the crypto, that are paying attention to all this, right? Again, if you have that person that invested in Dogecoin, was at 3 million bucks profit, and then it went all the way down to 200,000, and that person is still thinking, oh, it's going to reach all-time highs, which it probably could during a bull market, but they're not seeing how they can, solidify those gains, right? Or capture those gains. The whole point of taking a position, right? Like obviously that person is probably a Dogecoin fan or a meme coin fan or whatever the case may be. But, what's the point of saying, oh, I had 3 million, but now I'm at like 50K, or I lost all my money like that? It's cooler to say, okay, I invested in this thing that I really didn't think it was going to go anywhere, and I made all this money. Then I took that money and I put it in Tesla, right? Like, what if you would have put that 3 million in Tesla? What was the end of the bull run? 2021? Yeah, 2021-ish. I think in January, it was early January. So 183, right? So he would have been at 183 and then doubled his money. So he would have been at $6 million, right? And then, maybe I mean, this is just timing everything perfectly. But I think if you get it, if you get a double on your 3 million, should think about cashing out. And then, maybe sit in cash for another thing. That's another thing I learned too. Sitting in cash is not always a bad thing, right? You always want to be in the, like, I think you should always kind of be in the market, but I think if you made a decent amount of gains, like I think it's okay to be in cash for a few months until you figure it out, or just to see where the market is going and then deploy that money out again. I think unless you had a thought out plan where it's like, okay, I made all this money, then I'm going to throw it into this. That's fine because you thought it out. But a lot of the times when people make a lot of money, they'll jump into the next thing so quickly and make a mistake. So you want to take a breather, I think a little 2 to 3 month breather to analyze the markets and see where you could deploy that money to get your next double, get your next triple, and keep growing that portfolio, right? But Tesla's going to be interesting. I want to see where that ends up at the end of the year. Now, obviously, if they cut interest rates, that might stop the bleeding for Tesla. And it's just, 175 is a really good price. I think once they start coming out with these new, I think they said they were going to come out with like a more affordable electric vehicle. And if they do that, then, I could easily see it being a $250 stock, right? But I could easily see if they don't rush interest rate cuts, you could easily see it go to $100. I know Meet Kevin was saying that, like 69, or he was doing like some projections, and like some of his projections saw Tesla at 69 or $100 or something like that. But it was under certain scenarios if they didn't make certain numbers and whatnot, which it could be the case. If we go into a recession, it's not the 1% that's buying Tesla products, right? I mean, a good portion of it, but I would say their vehicles are like 40K. It's the middle class, the middle class consumer that's, driving sales, I would say, or maybe a little bit above that. But yeah, so yeah, that's what I think about the possible upcoming recession. I think it's going to present some opportunities. So make sure you guys have a brokerage account. And I would say, so the three things I would say that you would need for a recession when it comes to investing would be a some type of, I wouldn't say savings account, but yeah, I would say savings account with some money to the side that you can invest. I would say try to get to at least $10,000. I think 10,000 is like that a good number to deploy in a situation like a recession, because you could potentially get something that crashed so much, and then when it comes back up, you're getting a double or triple on that 10K. Now you have 20 to 30,000. So these are the times where you could get those doubles, those triples pretty quickly. So I would say have some money tucked aside. That's one. Or, maybe you have a line of credit that you can tap into. That could be another thing as well, but you got to be careful with that. You can't just use credit and not pay for it. There has to be some type of plan where it's like, okay, I'm going to invest this money here, and then I think I'm going to get a double in 2-3 months, so you can sustain that monthly payment of whatever it is for that 8 to 10,000. Pay that 150, that $200 a month, and then you get the double or triple. So now you can just pay off the loan or the line of credit, and then put the profit in your pocket. All right, but that's for people that don't have money but can get a line of credit. I could see that working. You just have to be responsible with it. Because if you check out Richard Fain's channel, he was using lines of credit for the watches that he flipped. And, right, he was responsible for it. He bought watches with the line of credit, right? And he had a seller, too. That's one thing, too. If you're going to use the line of credit, you want to make sure, like if you're doing stuff like buy and sell, I would make sure you have people in mind that you already know you want to sell to, or like a buyer, right? You definitely don't want to use that, credit to buy some products and you don't even know who you're going to sell it to. Now you're stuck with all these products, and then also you're stuck with that $10,000 credit line that you have to pay back. So, yeah, I'll be careful with that. I would lean towards just having some money stashed aside. So we do have a recession and things crash, you're able to jump into the market and pick up your favorite assets for a discount. So that's number one, have some money tucked aside. And then two, have a brokerage account. Most people don't have a brokerage account, an active brokerage account. You need to be able to make a move quickly and have that money in there, right? So, have the money. Two, have the brokerage account, and combine those two, merge those two, have the money in the brokerage account. And then three, have a list of your favorite assets that you want to buy. That actually should have been number one. Actually, no. You should number three, you should have the money first, the brokerage account, and then, find a list of assets that you would like to buy when they potentially go on sale. Because you don't want to be developing that list when stuff starts crashing. Because I even see it now in the crypto market that, I'm happy that I have a research subscription that gives me the plays I should be focusing on. But then two, I know I do my own research and I have my list of plays. So right now you're getting so many things getting thrown at you in the crypto market. And this is kind of how you lose money really quickly, because you start to jump on things that you hear on Twitter, you might hear on Reddit, and this coin is running, that coin is running, this, everything is running, and you don't even know where to put your money at. That's how it was in the first bull market, but I was still kind of focused on, a few assets, but it was bothering me like that everything was running, and I was like, oh, am I missing out? Now I don't really feel like I'm missing out. Like, I mean, obviously, yeah, you're missing out because you're not in those plays, but I know what assets are good and what assets are going to really boom when this bull market starts to pick up. So I don't feel like I'm missing out, even though, there's been some good gains. That's why I actually decided to take that trade. And yeah, but I don't feel like I need to jump into everything, jump into like a meme coin or some type of coin that's just running up. I don't feel like I have to chase, right? Last bull market, I felt like I had to chase, which I didn't do that, but I still had that feeling. Now I don't feel like I'm missing out because I know what's going on. So yeah, have your list of favorite assets ready to go, so that way you can buy them on the discount. But yeah, that's pretty much it. We went 35 minutes. Hope you guys have a good Friday or rest of your Friday, and I'll see you guys Monday. Take care.